This is John from Rich Gwynn, and I've been paying close attention to the big beautiful bill, Social Security benefits thing. My parents are getting older, as many of us are, and a lot of them really rely on these Social Security benefits. And so, depending on the news channel that you watch, unfortunately, you're hearing some people say it was a failure. He promised no taxes on Social Security, and there's still Social Security taxes, and Trump's a failure, and blah blah blah. And then you have other people saying no, it's not entirely true. And so I wanted to kind of create a brief video. It may not be so brief compared to what I normally do, but it'll tell you a little bit the more details of the one big beautiful bill and how it does actually decrease the quite significantly actually the amount of people that would owe taxes on their social security benefits. So up here we have this USAA Today or USAA the bank, no, USA Today article. Taxes on social security benefits were not eliminated despite what you've heard. And it talks about the one big beautiful bill and how um, you know many believe that nobody was going to pay it, and so it's just another um, failure by the Trump administration. He says one thing and during the campaign trail, and then it's another thing. Likewise, and I would say that there is some truth to that. There's a very small, and that's with the biggest lies. The ones that are most successful have a little bit of truth, right? And that's unfortunate. Is that we have people that are supposed to be providing us with news are now telling us, a narrative. And so a lot of people with Social Security are like, see, Trump promised us no taxes on our Social Security, but well, there's a huge change, and I want to go over those changes a little bit with you here. But before I do, I want to talk a little bit about Social Security because, in my opinion, it is the biggest racket that the U.S. government has ever unleashed on the population. Right? That they can continue to charge taxes in addition to this is just insane. But let's look at the facts about Social Security. It's called a benefit, right? But it's your money. You're legally forced to pay into a program through payroll, like your office or whoever pays you is required to pay you. Make sure that you pay the FICA tax, and they call it contributions. Right? There's power in words. This is super important that you guys understand that there's certain words that they use for things that mean nothing to what they're actually using them for. So, despite being mandatory and deducted from your wages and payouts, they're framed as benefits, right? Rather than earned returns on an investment when you start to draw it. So you contribute, unwillingly. And then when you actually go to draw it, they call it a benefit. No, it's your money that you've taken out of your checks. I mean, in my case, since I was 16 years old pumping gas at Conoco, I have on my Social Security worksheet, it actually shows the very first check that they ever took FICA taxes out. And I was 16 years old pumping gas. So these are not benefits. It's money that you've contributed into a system that is supposed to pay you back when you're too old to work, right? But then on top of that, you get taxed on these so called benefits in your retirement. And that was what was happening before the big, beautiful bill, but we're not there yet. So, another huge fact that a lot of people don't realize that many never live to collect back the money that they were forced to pay into this system. At full retirement age, 67, a significant number of Americans die before reaching this age. Think about that for a second, right? Many people that didn't have any choice, they had money taken out of their check, they expected to, whenever they were too old to work, they would be able to use this, right? But no, sorry, you didn't get it because you died before you were able or eligible to collect it. So when that happens, their lifetime contributions, think about that for a second. A lifetime, your working lifetime of contributions are absorbed into the system. In other words, you're not getting a refund. There's no credit, right, for a family member or a spouse, no full pass through to your heirs. And I know this personally because when my daughter passed away, right, she'd been working for a few years and her daughter got nothing. Think about that for a second. So if you pass away and your family's relying on you and you've been making contributions to this system that you don't have a choice to do so or not, your heirs aren't getting it. Your son isn't getting it. Your daughters are not getting it. And when that happens, the lifetimes of contributions are absorbed back into the government system. So, in effect, the money is kept by the government of all the deceased workers across the country and redistributing it in across the system. Okay, there's some serious rabbit holes of who's actually tapping into this SSA account. So, it's something that you should take a look at when you have some time, but just be prepared to get really upset when you watch that. The third point that I want to make is that there's no full refund to a family upon early death, which we kind of talked about a little bit, but you can request it, but there is effect you'd get nothing. It's forfeited. So what changes with the one big beautiful bill? You see CNN saying one thing, Fox saying the other. Oh, it's a great success on one hand, the other one saying, oh, what a failure. Trump is once again showing his true color. Now, let's look at it from the middle of the road where most of us lived. Okay, so before the bill, individuals owed tax if the income that they made after they started drawing it. Right? So, in other words, you're 67 years old, you're drawing it, and your income exceeds $25,000, you would pay tax on your Social Security. Married couples owed tax only if their income together exceeded 32,000. So, up to 85% of Social Security benefits could be taxed at that time. So 85% of everybody at the time before the bill passed, 85% of Social Security benefits could be taxed. No additional deductions for seniors, permanent tax rules unchanged since 1993. Okay, so now we're going to look at what's happened after. Seniors 65 and plus get a new standard deduction. As an individual, you get $6,000 and $12,000 deduction for couples. It applies only if your total income is below $75,000. So as an individual, if you still make $75,000, you would get this to offset this to determine if you would pay tax or not. Same thing, likewise here as couples, you could uh, use this deduction to bring this money down. Many seniors in this bracket now owe zero federal tax on Social Security benefits. I'm going to repeat it for the people in the back. Many seniors in this bracket now owe zero federal tax on Social Security benefits. That's what changed. Okay. Now, right now, it's not permanent and it expires in 2028. So, you know, it didn't change since 1993. So you do the math. Who's been in power since those time 93 to 2028, and who's made any sort of effort to try and improve the Social Security taxation situation for seniors in the United States? So, income threshold summary: if you're 65 plus and make under 75,000 or $150,000 as a couple, you qualify for the reduction and may owe zero tax on benefits. If you make over those limits, you do not get the deduction, right? And up to 85% of your Social Security, I mean, that's just laughable. Of your benefits, look, they use that word again. Your benefits can still be taxed. So they taxed it when they took out. Anyway, I'm not going to go back down that. All right. So the estimated impact on taxpayers before the bill, this right here is super important. Before the bill, 56%, over half of people that received Social Security benefits owed federal tax. Not state, I'm not including state or anything like that, but just on the federal level. 56%. After the bill, 12. 12. Now, it's not gone for sure. Taxes on Social Security is not gone for sure. But that means 88% of the people now that receive SSA aren't going to pay tax. I'm sorry, 88% won't pay tax. I'm going to say it again, 12% of SSA recipients will owe tax. 88% will not versus 56. That's a big change. Okay, so again, called a benefit, but it's your money. You'll never, many don't live to collect it, and there's no refund to your family upon your death. Folks, SSA, in my opinion, is a scam, right? I would love to know all of the people that have their fingers on that bank account. Why they sit there and they threaten seniors with the fact that it may run out soon. When in reality, there should be plenty of money. Because I looked everywhere to find out how many people, right, died before their age of eligibility to draw back their benefit, in quotes. You can't get that information. I can't, and I'm pretty good with searching for stuff, and I couldn't find information on the percentage of the people that were eligible for SSA that died before they were able to collect it. It's a huge amount of money. Somebody is got their fingers in the punch bowl.